Before heading into trading, there are really some basics that you should know. First thing is going to be, what's your trading approach? Now, there are generally two types of approaches, and they're categorized as using a technical analysis type or more of a fundamental approach. Of course, there's an approach that employs a combination of the two of them. And those that focus on the fundamental side of the equation, they focus on the cause of price movements, while technical traders focus on the charts and the price movement. Fundamentalists, they look at the macroeconomic indicators such as interest rates, employment rate, and the general health of the economies. And they take a macro view of everything related to the instruments that they're trading. Now, trading systems that rely on technical analysis, they use historical price data from the charts, and they attempt to forecast the future behavior or direction of price. So these traders believe that all current information about the market is already factored in to the current price. Now, regardless of the trading system you look to use, remember that there's more than one way to take money from the market. There are many indicators that are used in technical analysis trading systems. Now, some of the more popular ones are trend lines, Fibonacci, the stochastic oscillator, the MACD, various moving averages, and the RSI. Now, this is definitely not an exhaustive list of all the indicators that you can use, and most charting packages are going to come with more indicators than you're going to ever need. And another approach relies on the patterns that charts make as price unfolds. Now, dating back since the dawn of trading, price patterns have formed the basis of many successful trading careers, like Peter Brandt, for example. There's no question that for the budding trader looking for a trading system, an indicator-based system is the easier way to go. Trying to decipher the various fundamental issues affecting price can sometimes be a test of your mental patience. And most traders, both new and experienced, tend to focus their trading systems on a technical level. They either develop their own or they go with a trading system that's been developed by someone else. As you gain experience, you may, like many other traders do, develop your own trading system. Usually it's a combination of the various systems that you've tried over the years. It can also be a mixture of the various technical indicators that you've researched and you've tested. And it doesn't matter what approach you use for your trading system as long as it suits you and has a positive expectancy over time. So once you decide on the ways you're going to trade, you got to start to backtest your trading system. You're going to be looking to ensure that the system that you're using makes money. Now, backtesting is fine, but you should keep in mind that the past does not equal the future and does not put your trading system or you to the test in live markets. When you backtest, you have the luxury of looking at different scenarios and taking your time in deciding what you're going to do. Hindsight bias is a real risk when it comes to using past price to test the system of your choice. And a more popular way to test your system is to forward test it. And that simply means that you trade your system live, quote, in the market. Using a demo account or real money, you put your trading system to the test in the real world. And it also gives you the chance to see how the trading system suits you. And there's not an excuse, really, to not forward test. Almost every single broker out there is going to offer you a demo account. Many brokers also allow you to trade dimes in a micro account for Forex, for example, or E-mini micros. There's one broker out there that I personally use for Forex that caters to new and veteran traders alike. And for the new trader, they are able to trade in units, which can be a lot lower than even a micro account. So you have your trading system, and you want to know if over the long term it can be successful. So this is where you have to look at opportunity and expectancy. Think of expectancy as what you can expect to win or lose for every dollar that you risk. And here's the formula for that. You don't want your trading system to have a negative expectancy. You want it to be positive, and obviously the higher the better. What's opportunity? Well, simply put, it just means how many opportunities it will present so you can trade. When you multiply the expectancy of your trading system with the opportunity, you can see how much you can possibly make with your system over time. Okay, so now you have your trading system. And now comes the most important part. And we know that psychology plays a huge part in your success, but all that is meaningless without having sound money management principles. Most traders fail, and one of the biggest reasons is due to their poor money skills. Risking too much too often is really the path to the poorhouse, and not even the best trading systems can fix that. Most people entering the trading world think that trading is all about profit, and that's where they should focus. Any trader that has survived the learning curve is going to tell you that it's all about risk and preserving your capital. The general rule of thumb for traders is to risk between 1 and 3% with your trading system. This is a rule of thumb, as traders differ in how conservative they want to be, or aggressive. Now, this is actually food for thought here. It touches on a few key things that people think of entering trading should really understand. Obviously, much of this can be an entire course in itself, each of these aspects that we've talked about. So if we were to sit down and have a coffee, and I would sum it up, I would just say this to you. I'd say, pick your system, test your system, and don't bet the house on one trade. Options trading has become very popular over the last few years. NetPicks' own options guru Mike has put together a hot list of some of the best names to trade in the options market. You can click here and download your free hot list to see what names Mike has been piling up the winners with.